Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me again today is Chris Temple from the National Investor. How are you today, Chris?
Well, great. How are you doing, Tom?
I'm great. I wanted to have you back on the show because we really focus specifically on inflation and hyperinflation, deflation, just to kind of do a deep dive on that. And I wanted to get more of your views on more of the general markets as they were. Before the call, we were discussing uranium and the recent Department of Energy's call with the Nuclear Working Fuel Group. So why don't you give us an overview on that recent call and what that means for the industry going forward?
Well, sure. One of the sectors that I am extremely bullish on is uranium. There are a lot of things that are starting to reach critical mass slowly but surely that could in the next couple of years or so lead to what, I've used this term and others have, but a true rip your face off rally in this space. There's a lot of different reasons for that. But first and foremost, since you brought this up, last Friday I was on a call with, I think it was about 1,000 to 1,100 people, media, government people, industry, and so forth, that was actually set up by the Department of Energy. Secretary Brulette was one of the first speakers on it and gave kind of an overview of the findings that were discussed recently by President Trump's Nuclear Fuel Working Group, and we'll talk about those here as we go along. But basically, I wish they had recorded this thing or that every American could have listened, because the issues with the U.S. in the last few decades, having surrendered its leading role in cutting-edge technology for nuclear power, has done a lot of things. It's hurt our standing in that industry. It has opened a door for Russia and China to be the go-to providers today for every part of the nuclear energy fuel chain. And it's something that President Trump has made very clear was a mistake, like so many other ways that America's fallen behind in other industries. There's a particular element beyond what is a global bullish picture for uranium. It's acutely that, if things play out as I think they will in the U.S., because what the Nuclear Fuel Working Group has talked about recently in what they released is similar in its underlying theme to a lot of things that are being talked about these days, Tom, and that is the U.S. has learned the hard way yet again that we need to reclaim control of our own economic destiny. When you look at China, for example, the president made very clear a while back that he thought that the U.S. had been gamed by China. Of course, that was enabled largely by the U.S. itself, because that's where the money was. Banks and corporations that long ago set up shop in China, they have no patriotism to anything except the almighty dollar. So that got us in that mess. Now we've learned with this Wuhan virus that not only are our sneakers and cell phones made in China, but so is a lot of our medical supplies and vitamins and antibiotics and other drugs and whatnot. So to extrapolate from that, there's a lot of different things now that are on the table in one way or another for the U.S. to start to bring safer supply chains back under our own power. I've been talking about it in the area of lithium. Rare earth processing has been in the news. And of course, there's uranium, where we use 1/3 of all the uranium in the world. That's how much the U.S. consumes. Domestically, though, we have a lot of shuttered capacity for production. In the year 2019, we produced a tiny fraction of what we used. Even our nuclear-powered Navy runs on uranium that comes from Russia or Kazakhstan or countries in their orbit. And while I am not like a lot of the just brain dead and crazy Democrats out there who think that Russia is our number one enemy in the world and everything that's bad is Russia's fault, I personally believe we should be friends with Russia. Nevertheless, especially when we have the ability within our own four walls to be supplying our Navy, supplying our medical industry for what they use, and supplying our utilities, why aren't we doing it? So that's a subject, one of many, that needs a lot more attention, but has been dwarfed by the virus-related stuff, and of course now by all these riots. But it's coming, and wise investors are getting out in front of it, Tom.
Very interesting, Chris. Because of all the factors leading into this that are really making this a possible, as you say, rip your face off bull market, the supply chain disruptions, again, more demand being pent up. Now we have the Department of Energy recognizing that there's going to be a major shortfall. Do you think we could see a bigger rise in the uranium price and uranium related miners than we saw last time?
Oh, no question. And I mean, two things on that real quick. First of all, I want to underscore that the global bullish environment for uranium has really little to do with this unique situation in the U.S. and the U.S. needing to do different things to get more domestic uranium production kick-started, restart research in the U.S. on modular reactors and a lot of the other technologies that make nuclear energy in the end better, cleaner, safer. And of course, we all need to remember that it is the only source of green energy that can supply 100% of your fuel needs 100% of the time. It's not dependent on sun, it's not dependent on the wind, and it is 100% carbon free. So, even the environmentalists are warming up to this, and it's really an untold story that needs to be told better. So you've got countries like China, India, the United Arab Emirates, an oil name, just fired up in recent months their first nuclear power plant. This is the way the world is going. There are developing countries in sub-Saharan Africa, in South America, that never developed quickly enough to have the kind of intricate food chains of fossil fuels, the pipelines, the refineries and everything, the power grids like we have in the West, and they're not going to do it. They're going to go straight to a combination of wind and solar where it works. Electric vehicles will come in future years for transportation, but you're seeing massive, massive plans already underway in the world for countries, and of course China and India being the two big ones because of the terrible pollution problems there. They know that nuclear energy is a big part of their future. So you're building all these reactors at a time when the market has been weak and the uranium supply has finally gone down, the price crashed. So with a lot of these things now starting to percolate, we've gone from a spot price for uranium of about $18 a pound at the low a year or so ago to nearly doubling now. We're in the low 30s, $33, $34 a pound. Longer term contracts need to be done at between 40 and 50 minimum to make the math work for producers and to encourage some of the shuttered uranium production to open up. So you've got a really bullish picture that is shaped up that really is the epitome of the old saying for any commodity: high prices cure high prices, and low prices cure low prices. The unique thing about this being that you've got low prices and shuttered demand, or shuttered supply, when demand is going to be going up incrementally for as far ahead as you want to look, and really at a rapid pace as well. So that's the first point, is that besides the uniquely bullish situation for certain things in the U.S., as the U.S. gets its act together and reclaims some of our own destiny with our own nuclear supply chain, you've got this pre-existing global bullish picture. The other thing from an investment standpoint, Tom, and you and I talked about this off mic earlier, one of the important things to get your head around, and what really excites me about the uranium space, is that in the bear market for gold and precious metals generally, but I'll say gold, of the last several years until things started to turn around about a year and a half ago, not enough companies went out of business. You've still got these garbage companies out there that have got a few $1 million market cap. And I recommended a few with a few $1 million market cap. My best performer this year has gone from a nickel a share to 25 cents a share. And it started out with a few $1 million market cap. So if the story is there, fine, and it is. But more so, you've got companies out there that can't raise money. They've got marginal assets, and all it is a PR effort to try and just keep the doors open. Not enough of those went out of business. But in the uranium space, just about everybody dropped out of sight in the ugly bear market for uranium that started in 2011. So there's not that many companies out there, even exploration ones, let alone producers or near-term producers. And I've quipped in the past when it, talking about gold again for a second, when it comes to the gold space, that what's really fun when the gold market gets going and it's so relatively small compared to all other assets, it's like a 300-pound man jumping into a kiddie-sized wading pool when generalist investors come into gold. It's got a dramatic effect and things go parabolic. Where it comes to uranium, it's going to be like an elephant jumping into a kiddie-sized wading pool. And there's only been a few glimmers. I mean, none of the companies out there, certainly the ones that I follow, if you're talking about a multi-year bull market for uranium, you've had 1 or 2% of the moves so far you're going to ultimately see, in my opinion.
So using that analogy of a 300-pound man or an elephant jumping into a kiddie pool, what's your outlook for silver? To me, if we look at the fundamentals of silver always or typically lagging gold as it starts to move up, don't you think the fundamentals of the average retail investor wanting to get involved in the precious metals industry, seeing silver as a far more easy entry to be able to get into or exposure to the precious metals, explain to us why you don't think that might be the case?
Well, it hasn't been to this point. Now, nothing lasts forever, and I call things as I see them, right or wrong, in the end. I don't have a preconceived notion. I mean, it's been comical where silver is concerned, Tom, that I've had some of my own friends and colleagues that think I'm terrible because I haven't been pounding the table on silver like I've been pounding the table on gold, and this gold-silver ratio that they love to follow, it was 70-1, then it was 80. It's 80-1. You don't tell me you're crazy. Silver is cheap. I said, no, it's going to go over 100. Oh, you're nuts. Well, it went to 120 something. Now it's been going back down. Now it's back under 100. Promising. It's also promising if silver can add about another 80 cents to $1 from where it is today with some authority, because you'll break resistance level at around $19 and some change, and the next chart level would be the mid-20s for silver. And I'm very seriously contemplating advocating a couple of leveraged silver-related ETFs as trades, depending on how it behaves. So I'm not always bearish on silver, but let's talk about why I haven't been bearish on silver until now and what needs to change besides the technicals. First of all, gold today, and I'm just going to use round numbers, gold is only 10% below its all-time high from 2011. Silver is 65% below its all-time high from 2011. And it's stayed that way by and large, even as gold has had a huge move in the last year and a half. And the reason for that is that, and I always talk about gold bugs, and in this case, silver bugs. You can't be religious about these things. You've got to look at what does the market see. Yeah, we know that if you're in love with silver, you're a small minority of the total investing population. You're already 100% invested. You're not going to move the needle. Okay. The question is, who's going to move the needle on silver? And it's generalist investors, hedge funds, and things like that don't start out with the religious affinity and love for silver. What's going to animate them? Okay. And by and large, my short answer to why gold has done well and silver hasn't is because gold is money. Gold is a reserve asset. Silver is not, whether you like it or not. Silver is not. You haven't had central banks in the world for years now buying silver and adding it to their foreign exchange reserves or adding it to their other reserves. They're buying gold. Gold is the uncurrency. Gold has been in demand not only in the absence of inflation, but because of the absence of inflation, Tom. When the knock against gold for so many years was who wants to buy it that doesn't pay interest? Well, guess what? Neither does everybody's sovereign debt anymore either. So that's why people have been buying gold. Now, the point will come when gold will respond to the traditional inflation scenario, which we are not in yet. Okay, far from it. There are still as many or more dangers of deflation in the world as there are inflation, which is why I've held back on silver. Because silver, and again, whether you like it or not as a silver bug doesn't matter. This is how the other 99% of investors and the market views it. Silver is an industrial metal to them. And just like copper, just like a lot of other industrial metals, it has been on the back foot because we may well, with one or two more bad moves, and we've got a renewed one where China and Hong Kong are concerned, we may slip into a multi-year depression where in the wake of that, the central banks will start adding one or two zeros to everything they've done recently. Then you'll have your broader inflation coming out of it. Then will be the time that gold brings up the rear and silver catches up, and that gold-silver ratio finally moves down for good. But we're kind of in between right now. You know, silver has benefited recently from the U.S. dollar softening a bit. We're still in a definite long-term uptrend for the dollar, and until that changes, that alone has me hesitant on silver, copper, oil, the stock market, emerging markets for sure, pretty much everything but gold. So in summation time, you may have a question. What I want to see, if I'm a silver bug, I want to see the stock market continue higher to all-time highs. The Fed continues to pump money out there. We get more stimulus. We get no more shoes dropping as far as deflationary fears. Hong Kong and China do not implode. And if we truly have seen the central banks respond so aggressively that they have vanquished the deflationary forces that were being unleashed, and we're going to go right straight into stagflation or inflation, then I do like silver as opposed to gold. But we're not quite there yet.
You just gave us quite a few caveats there, Chris. And that to me raises a question of what you think that next match that's going to set off that powder keg. Is it China, Hong Kong? Is it more lockdowns, let's say going into the fall if we have another rise in the virus? What do you see as one of the most vulnerable pieces of that puzzle right now?
Well, look, if any of those things happen, you don't want to be in silver because we go right back down. The copper will go down again. Oil will go down again. The stock market will go down again. Gold would be the only thing to hold up. But again, it's because, if I'm understanding your question correctly, it's because there's all these dangers out there still that I'm a little bit hesitant still for silver. And really, I'm not singling out silver, any of the base metals, any of the cyclical stocks. Because if you're going to have a new credit crisis in the world, and again, the number one suspect is Hong Kong now, then you're going to see another major hit to economic expectations and to global growth, and that will help support gold. Gold wins in any possible scenario going forward, but silver does not, and that's really the distinction.
Interesting. Not just looking at it through the lens of just what it means for silver. Let's say in the general market and just in the general news cycle, what do you think are the big picture items that are really a risk going forward?
Well, the big picture items going forward is again, that we do have a recurrence of this virus, another round of lockdowns. I think politically now that is a smaller chance because of everything that has happened to this point. That's a whole different story. I am very decidedly one of those who believes that it was a horrible mistake for the average person to have any of these lockdowns we've had to this point. We should have done what we needed to do to take care for the vulnerable population, as sensible people do for themselves and their providers do every flu season. Okay. Yes, there are different elements of this Wuhan virus that made it more dangerous than others, but the cure of what it has done to small businesses and the economy has been far, far worse, in my opinion, than the disease. So, if we were to see something bad happen, That would, of course, hit the base metal stocks again, cyclical stocks, economically sensitive ones, et cetera. The other thing beyond that is, and again, this is why it was so important that last week you and I spent a lot of time on this whole inflation thing and understanding money and inflation and deflation and how all of that works today and all of those moving parts, is that gold responds today to deflation or inflation. Silver does not, it has not, and it will not. All right. If you got such a massive move up for some reason in the gold price, it would inevitably drag silver along. I'm not saying it won't at all. But, on a fundamental basis, you don't want to see any more deflation dangers, or again, you want to see, my quip when you and I talked last week was Powell has already graduated from helicopters to cargo planes. Now he's going to drag out those great big massive spaceships like you saw in the movie Independence Day. They're going to unearth all of those from Area 51 out in Nevada. They'll load all that up with dough and be dropping it on people if they have to. So when we get to that point where you have a broader inflation or stagflation situation, and there's precedence for this. Go back to, in the recent past, and it was, again, fueled by China and by all of the debt that China took on to build massively their infrastructure in their country and so forth. But if you look at the year roughly from 2002 to 2007 or 8, you had a several-year monster run for commodities back then. Gold properly brought up the rear. It did well, as it did in an environment where you had a weakening dollar for much of that time, relatively soft interest rates for those days. But that was a demand story in the context of easy money as well. All right. So you had silver, copper, energy, all different kinds of things did way better for that several year period of time than gold did. That's a healthy economic environment. If you're a silver bug, that's what you've got to see. That's what you want to be hoping for. And what gets me is the people who think silver is going to go nutso because we're going to have a depression. I'm sorry, I disagree. You want to see the central banks really go nuts and print all kinds of money and have that and hopefully to ratify all of it, Tom, have some kind of a legitimate growth driver, or even half legitimate one like China was, that's going to reinforce the easy money and build a sustainable bull market across the board in commodities. We don't have that right now. Now, at some point, I think one of the things that will do the trick potentially, for a lot of different reasons I'll be talking about in this summer and some of the stuff I'm bringing out, will be if we do see governments like the U.S. embark on massive infrastructure programs where you have some added support for raw materials that'll be used in various ways. But we're not there yet either, unfortunately.
Turning a little bit to how you make decisions to make specific trades, you make typical calls, let's say GDX, GDXJ, and I just wanted to get your take. What kind of information for you goes into making the call to buy or sell ETFs, whatever it's going to be. Are you looking at the RSI? Is it technical analysis? Let's say, what are the factors that go into making those decisions for you?
Yeah, first, I'm the first one to admit that I am far from the best guy to talk to about technical analysis. There's a lot better technical people out there than I am. I look more at fundamentals. I look at narratives, and kind of like I quipped earlier, where let's say silver is concerned. What is out there? What is the narrative out there? What are the fundamentals out there that are going to convince generalist investors and people who are not already in silver that this is a place they should be? Now, part of that is a technical behavior. I mentioned that, we're coming up here within less than $1 of an important sharp point for silver. And if it can get above that resistance of the recent past, it's going to invite some momentum buying, and purely technical investors who couldn't give a rat's rear end what the fundamentals are for silver, they will see a technical breakout. And if you see a strong close above 19.10 or 20 an ounce, you all else being equal, and as long as risk assets generally hold up, you'll get a pretty quick sprint, I think, to the mid 20s per ounce, where the next major level would be. So I'm looking at that. I'm looking at the fundamentals. More often than not, I advocate the ETFs as trading vehicles. For example, when the gold bull market was first starting out in the latter part of 2018, my recommendations were tilted more towards the gold-related ETFs, GDX, GDXJ, UGL, which is a more leveraged bullion-related ETF. And then as thing went on, I started de-emphasizing those, and in fact recommended selling those when they were at their high in February. They crashed. We thankfully missed that. Traded in a little bit and caught some of the rebound, but not very much because I shifted towards worrying more about what longer term individual companies do I want that I don't advocate timing on. We're buying them for the stories and the fundamentals. So with silver, if I see the kind of breakout that I just suggested is possible, I'd probably advocate positions in a couple of the levered silver-related ETFs, both bullion and silver miners. And then think about what individual primary silver producers do I want to start to get back into. Right now, some of the mining related companies I'm in have got silver production, but not a one of them is a primary silver producer.
Excellent. Chris, do you have any extra thoughts you'd like to share with us before we wrap up here?
Yeah, real quick, and I'm going to be talking more about this in the coming days, my own newsletter and website, Tom, but I think that again, one of the many issues that investors and really all Americans should be paying more attention to, but we're not, because first it's the virus stuff and now it's all these riots in the country and the unrest and all of the repercussions back and forth, is what may be about to happen with Hong Kong. It's one thing when we have the new Cold War that is heating up again between the U.S. and China. China this morning, as you may already know, came out and said officially what everybody that has half a brain that follows this stuff already knew, and that is that it is not following through with that phase one trade deal that Trump and Xi agreed to last year and never had any intention to do so, in my opinion. Now they've got reasons not to. So they're suspending their purchases, among other things, of soybeans and pork. It's intended primarily as a political slap in the face to Trump because of what he's said about China lately and Hong Kong. So, this is going to start to reassert itself again, which again is a potential deflationary danger. And at some point, Wall Street may wake up one morning and decide to actually pay attention to this. But here's where it gets serious, Tom. It's one thing to see this wrangling back and forth over trade. Let's not lose sight of the fact it's been covered not at all by the financial press. The Chinese yuan in recent days is at its lowest level against the U.S. dollar in over a decade. And there's different reasons for that, a couple of which are rather ominous, that you've got new capital flight from China that adds stress to that country and its markets. That's why Bitcoin, which is a favorite speculative trading vehicle for people trying to move money out of China, has gone up recently as well. It's why gold has held up. And hell, for all I know, they may push silver up too, or silver ETFs, people trying to get money out of Dodge that live in China. That's all one thing. What is potentially going to be added to this equation that bears watching is this. There is no more leveraged financial center on planet Earth than is Hong Kong. Worse than New York, London, Frankfurt, I don't care where you look. There is no place on the planet that has more leverage, partly as a result of its symbiotic financial relationship, at least with China. Now, one of the things that President Trump is threatening, I don't remember if he can do this unilaterally or if Congress needs to take action, but you've got sympathetic bipartisan voices in Congress who, over various things, their mistreatment of the Uyghur people, the Muslim minority in northwestern China, their human rights violations generally, their crackdown, this new security law on Hong Kong, which, according to the U.S. and U.K., violate China's treaty with the U.K. over Hong Kong, struck in the late 90s. This all may lead to an official U.S. reclassification of Hong Kong and our trading relationships and others. By definition, that will require, at least under current law, that a lot of financial entities answerable to U.S. authorities divest some of their activities in Hong Kong. And when you're already dealing with the most leveraged financial center on the planet, it's not going to take much to push them over the edge. And all of a sudden, all these deflationary dominoes start to fall. So, we've learned where both China and U.S. relationships, number one, are concerned, and number two, where President Trump's own pronouncements are concerned, that oftentimes it's more bark than it is bite. What did the president tell us last week? He's going to shut down Twitter. Well, he didn't do that. He can't do that. And what he finally did recommend, it doesn't mean a whole hell of a lot, frankly, at this point in time. That's a different story. But on this, it bears watching because, we just saw the people that control this country create a disaster economically for the average American and the average small business owner because of a policy decision which, based on the alleged science, was the wrong thing to do. But it was the right thing for the powers that be because, as always, among other things, the rich get richer and the poor get poorer. That's always seems to be the end game. And when they've done that in the last few months, not only in the U.S. but elsewhere in the world, it's not too much of a stretch to see that for political reasons and competitive reasons that these same people would push China and Hong Kong over a cliff and have a renewed disaster and crisis in world markets as everything tumbles. So stay tuned.
Stay tuned indeed. Why don't you share with us where we can find more of your information that you put out, Chris?
Well, just go to nationalinvestor.com. I've got a lot of stuff on there of a generalist nature to kind of give you flavor. I more recently added our discussion from last week because I think it's important for people to get their heads around all of this whole inflation debate, whether it's about gold or anything else, frankly. And if you're there, you're not already a paid subscriber, you can sign up for my free list. And most of my recommendations are only for subscribers. But among other things, if you sign up, you will be getting my updated uranium report in the not too distant future, my updated sector report on gold, and something that you and I haven't talked about before, but I was among my peers, I was a first mover in Ecuador and its mining story several years ago. And there's a lot of really cool stuff for investors down there as well. So all of that and more is going to be coming out in the near term. And, that's how you can get it. Excellent.
Thanks for your time today, Chris.
Hey, my pleasure. Good to get myself even more heated up as if I need it. We're full on tropical season down here in Florida now. So
sounds like a great place to be. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?